Mr. Demi, hello.
Hello, Mr. Gavin. What's going on, mate?
I'm quite excited. We've got a new channel that we are streaming live to, thanks to the help of our tech wizard and the guys at Share Vision. So we're streaming live on Share Vision today. We're streaming live on YouTube. So we've got Nick in the house representing the YouTube crew, and we've got Slav, who is always the first comment. And then we're also broadcasting live to our Facebook group on Facebook, obviously. And as if by magic, up pops Brucey, who's watching live on Facebook. Not from the toilet this week. Going to applaud that effort, Brucey. Going to applaud that effort. Very, very impressive. So, mate, how you doing? How you doing today?
Good, mate. Yeah, busy morning, but doing well. Doing well. How was your weekend?
Weekend was really good. Went out dancing with the missus on Friday. Chilled out on Sunday and Saturday, actually. Just did a bit of stuff, but just a little bit of coupley stuff, and that was it. But today I was feeling really smug. I don't know about you, but I am rubbish. By the way, we're about to jump into loads of FX content. We're just letting a few more people join in. We've got Roy joining in. We've got Annika joining in as well. I'm hoping I'm pronouncing your name correct, by the way. You're so polite every week. If I've mispronounced it, please just let me know, because it's quite annoying when you get someone's name wrong. But back to my little story, just to fill while people come in to the group. I don't know about you, but I am rubbish at getting organized for like birthday cards and Christmas cards. So my sister last week, she gave me a heads up. She was like, Gav, it's mum and dad's 45th wedding anniversary. Make sure you send them a card, mate, and do it on time. I'm giving you like a week's notice. I was like, oh, cheers, sis. Thanks a lot for that. So I got it done today, like literally an hour before this show, feeling all smug on myself, went on Moonpig, picked out a really good card. I zoomed into the front cover, you know, like you can pick your own pictures and then make it all personalized. Wrote a really heartfelt personal message. Congratulations, guys. You've been married for this long. Can't imagine all this.
It's not going to get there on time, is it?
No, it's going to get there on time. That's fine. It's going to get there on time. I didn't preview it. I just pressed order because I was like, well, I've nailed this. I've got a great picture. I've put a really heartfelt message into it.
Rookie mistake.
I know. I didn't preview it, right?
Because you always copy your text, mate. You always copy your text. It's rule number one.
So I didn't preview it. And let's just say afterwards they were like, congratulations, here's your order. And it says on the photo, because I zoomed in so much on the picture, their name for this photo is now Sandra and Peter. And that's not their names. I didn't change the freaking names, you know. It comes up with a template, which I haven't used Moonpig in forever. So now my mum and dad, who is, let's just say their name's Sue and Dave, shortened versions, they're now Sandra and Peter on the card. Happy 45th anniversary. What? Can someone please make me feel a bit better and say that they've done the same mistake? Is it an easy mistake to make, or am I just being a total rookie?
That is terrible, mate. You're going to have to send them another one.
I'm not buying another card. They'll have to put up with it. I'm not sending two cards.
Yeah, and on the second card, just put, by the way, please give the other card to Sandra and Peter when you see them.
Yeah, but that doesn't make sense because it's my mum and dad's picture on the front.
Oh God, I don't know, mate. There's nothing I can't do anything to help you.
Yep, and as usual, I'm getting no sympathy in the group. Don't give up the day job. Roy, fluff that one up. Brucey, never done that. Gav, it's you, mate. Perfect. So one thing I can do half not bad is put Mr. Demi on a pedestal and showcase his skills to the world. So I think after that little story, unless you've got anything as equally embarrassing that you'd like to share.
No, nothing.
I didn't think so.
No.
Yeah, I didn't think so. If anybody else watching on the live, we've got 17 people at the moment. If anybody else has got anything they want to share that's remotely embarrassing, please do it now before we get into the content. Yeah, nothing's coming in from anyone else either. Just me on that one, which is fine. I kind of half expected that. But let's jump into the content because we have got a lot to pack in today. So as usual, we're going to break down the biggest FX news of the week. As usual, we're going to jump into the live charts to do an analysis to give you an FX trade, high probability, low risk, all within 15 minutes. That's our promise to you guys. But first, we're going to break down the dollar because it's the start of the month. It's November. We all know what's possibly heading our way in the world of cryptos, but we won't talk about that until tomorrow. Today is all things FX and the circus that is FX. I don't know how the markets are still standing, let alone trading, but that's a whole nother conversation. What is your update on the dollar? Because I think that's quite central moving forwards for November and into December. What can we expect looking at the charts for dollar strength? So please enlighten us with your wisdom.
I will, if I can bring in my screen. 1 second, guys.
Whilst you get up your screen, I'm still getting more stick from our members. I love you guys, even if you do laugh at my expense. Stephen Walsh, you're on your own with that one. Thank you very much for that new comment. I haven't seen you. I don't recognize your name on the live before, which is probably not the right thing to say. But the point I'm trying to say is thank you very much for a new member comment. That's great to have you on the live with us. If there's anyone else on the live who's never made a comment, why not do one now? Why not do one now?
Good idea. Live for the moment.
And also, can you like the show, please? That's our form of payment. I never actually asked for that, and I realize afterwards I should, because there's like 2 or 3 likes, 10 likes, 20 likes. Let's get some love on the channel so that Facebook spreads us out far and wide. So that's my ask to you guys. Thank you.
Yes, please. Thank you, guys. So there's just to put everybody on the same page. The dollar index, the Dixie, is an index made up of a basket of currencies. So in theory, what it should do, it should give us a good idea of what the dollar is likely to do. So you can go, you can look up the dollar index if it starts working. And just because we do have some new people on here as well, and I think it's good that everybody, for some reason my internet is acting up a bit. So may not.
Wi-Fi. Thanks for the admission, Wi-Fi.
Don't know what's going on. I think it's my computer. I haven't closed this laptop down for God knows, like maybe 2 years. So I should actually close my laptop down. But if we can hopefully get on here. Hello, this is like the dial-up days. Here we go. So this is the basket basically. So you have 57% on the euro, 13.6% Japanese yen, sterling 11.9, CAD 9.1, Swedish krona 4.2, and then the Swiss franc 3.6. So basically the basket is the dollar versus these currencies put together. But the thing with the dollar index is that because the largest weighting here is the euro, and that's basically simply because there's obviously a lot of European countries there, so that's why the weighting is the highest. You know, it's almost like the inverse of the euro dollar. So I'm certainly going to go through it, but what I prefer to do is I generally prefer to look at my own basket, which actually has an equal weighting across a few of the FX pairs, okay, FX currencies, so that I'm not just really kind of analyzing the euro dollar, because if 57% of this is the euro dollar, you know that the majority of this analysis is going to really be more relevant to the euro than anything else. So it doesn't become as useful. Okay, so I've built my own basket, which you can do on TradingView. Now, just kind of some simple things we can look at here on the euro dollar is, sorry, on the dollar index is, you know, the moving averages here. So, you know, if you look at the daily chart, That's kind of one of the signs that you want to look for is the 50 EMA above or below the 200, and where is the price relative to the 50 and the 200? And if the red line is below the green line, the 50 is below the 200, then it's bearish. And if the red line is above the green line, in simple terms, the 50 is above the 200, you can look at that as bullish momentum right now. So you can see we had a cross, that's the golden cross it's called, basically back in August. And since that point, you can see the market has, the dollar has basically increased in value. And this is where we are right now. Now, we can also put in some basic fibs on here to kind of see where the cycles are. We can put in some channel analysis. Like you can see right now, the market looks like it's got this channel here, okay, which might come into play. I think the top line is probably a better one to use, because that looks like a much better line that we could then hopefully fit to the bottom market as well. So if I just, you normally want to find one of the channels and then project it, and hopefully we can get a decent line of fit. That's really great. Okay. Now, some people might be surprised as to why I put it there. Well, simply put, because you can see the market reacts to support, resistance, and then there's a little bit of a fake out here. See that? A little bit of a fake out, and then it goes back in and then acts as support here again. And then look how it again comes here and acts as support. So right now, if we are to carry on with what's going on, hold on. Yeah, I should have really restarted this laptop, because it really is, hopefully we'll be able to get through this session, but it's just acting up for some reason. But yeah, what I basically was going to show you here is essentially, if this market is going to carry on doing what it's been doing, then we might expect a push up towards the top end of this channel, in which case, if that does happen, then the dollar is going to increase in value. Now, as I said before, in normal circumstances, if you said, okay, the dollar is going up, then what you'd want to do is you'd want to find currency pairs to basically sell against the US dollar. So, for example, GBP USD might be one of those, right? Or so we could sell GBP USD, we could sell Euro USD, we could sell Aussie USD, and so on, right? That's kind of what that would be telling us right now. Now, as I said, because 57% of this analysis is on the euro, you could definitely say that the euro dollar might be a short right now, okay? Like you could say that with a good degree of confidence, right? Having looked at this, that if this market's going to continue to push up to the top end of the channel. So then you would go and look for potential trades, in those currency pairs. Now, I'm just going to do one more thing here, and then if we have time, I could look at the dollar basket, but again, I don't want to kind of use up all the time, because obviously we've got a currency pair that we want to cover as well. Let me see if by any chance my fibs are going to work by themselves, in which case we're going to save a little bit of time on me having to draw them out. Let's have a little look. So we need the starting point about 9,000. I'm just going to go in and change this one here. And then hopefully it will give us a good idea of where we are in terms of the cycle on the daily chart. Let's have a look. Perfect. So what this is basically telling us right now is that this market has pulled back to its 38%, that would have been a really great buy zone on the 50 daily EMA, and then the market is pushed up. Now, the other thing that we could also look at is volume. I'm not going to necessarily, I'm not going to do that on here. You can't, you need to get the futures contract up anyway. But that looks like a very nice bullish engulfing bar on the dollar index, which basically means that, you know, right, it's pulled back to the 38.2. So you can definitely see the potential for this to go higher. Now, according to the Fibonacci cycle, you'd be really looking at the next move being all the way up here. But that would mean that we either take our time to go up, or it would mean that we break this channel, which is a possibility. So right now it looks bullish. 50 is above the 200. The price is above the 50. It's held on the 50, and you know, you can see it's looking like, you know, even if there is a pullback, the dollar is probably going to continue higher. And just if I just do one thing, if I have the chart up, let me see. Can you hear me, by the way, Gavin?
Yes, mate.
Okay. I just want to make sure, because it is something's going on today for some reason. And I think it's the laptop rather than the internet. But as long as you can hear me, that's great. I'm going to just, if I can, I want to bring in the euro dollar because we spoke about it last week, and then we'll kind of, we could even use that as our trade for analysis this week. If I can do it, I don't even know if I'm going to be able to. Here we go. So hopefully I'm going to be able to get MT4 up here. You can see something's not quite working, but without kind of doing too much, because I don't want to, and I may just shut down MT4. What we spoke about last week, I want to bring this up if that's okay, Gavin. Is this the right time for it, just to kind of highlight something, or do you want me to do this later? Is that all right?
Hey, we can freestyle it.
We can freestyle it. Okay, perfect. Because what I spoke about last week was, you know, when we were on the show, we were talking about this here being our sort of buy zone, okay, as it was approaching down to the 618. And then we said, look, you know, the market will, if you put your stop behind the A, and then potentially you could target the fib D. And then what ended up happening is, like, the market actually, you know, just consolidated, went a little bit higher, and then it went a little bit lower, and then eventually went higher. And you can see, if you put your stop behind the A, the market eventually pulled back into this gray zone here, okay? So then what you would have had to do is you adjust your target down to the gray zone. And I just wanted to show how powerful these fibs are, because even though we had, you know, obviously a news reaction there, the market literally went perfectly from its C up to its D, hit our target of the D, and then it kind of fell off. And that is a really good example of why, you know, because I remember people were saying, like, you know, could you go with a tighter stop? And the answer was, yes, you can, but you're going to have to be in front of your screens, because this kind of thing could happen. And most likely, for those that went for the tight stops, they don't catch this move. And I just wanted to just bring that up, because it's one, highlighting how powerful it is when you build this picture up. And now, like, kind of using the dollar index, you can see that we probably should be focusing on the short side, and that's possibly where we might find another opportunity on the euro dollar. So I thought it was worth bringing up, because sometimes we don't bring up, like last week's example, and I think it's good for people to kind of learn from them. Is that okay? Any questions on what I've done? Does that cover that section?
Guys, if you've got any questions, then let us know. Just pop them in the comment section and we can go through that. So no, that's good advice. So just to do a quick recap based on this analysis, what is your kind of 30-second elevator pitch on what to expect moving forwards?
Well, I mean, according to this chart, it's showing us that the dollar should continue to strengthen, certainly against the basket that it's up against, So in particular against the euro. So using the dollar index, we could definitely consider that the euro dollar might represent a good shorting opportunity, and possibly some of the other ones like sterling, and which has got about 11% holding. I think they're the two that I would kind of use this to then go and break down and say, like, possibly is there a setup on euro or cable as a short? That's kind of really it in a nutshell.
Okay, cool. You just froze up then a bit, but hopefully everybody could hear you on that. So how long do you think that this is in play for? How long do you think that data is valid until this breaks the market channel line? Either way?
No, not necessarily. Good question. I think if it breaks the market channel line, then what I would be looking for is something, because this channel, it's not going to last forever. It's not going to last. It'd be unlikely that it's just going to keep channeling all the way up here. So I would be kind of looking at a pullback. I'll tell you where. Probably, ideally around the 618. That would be the next great buy zone. One, for two reasons. One, it's the 618. The second thing is it's the same as this parallel line. And actually, I'll give you a third reason. It's the 200 as well. So then this becomes a really, really powerful buy zone. And if I just show you something here as well, to even make it even stronger, I think there's a really nice kind of hidden support point here as well. Look at that. So that there becomes a really... So what you can do, guys, if you have TradingView, is you could highlight this and you could add an alert here to let you know once the market reaches that point. You could say something like, consider shorting Euro USD and any other pairs against USD, right? Because the likelihood is that if this isn't going to hold, this is a very strong possibility that it is going to hold right here. And for day traders, this is going to be a real kind of leverage point for you. It's like a hidden point for people. So when you're looking at this and then you go to the euro dollar, you already have your head like, okay, the dollar index is probably going up, so therefore the euro dollar is probably going down, and then you can find your setup with much more confidence.
Yeah, put a DTR on that and you've got a beautiful fade trade set up.
Beautiful trade, yeah. You just got to be ready for it, and you'll make money. It's almost that certain.
So just if anybody's totally brand new and they've never set an alert on TradingView, we have spoken about that multiple times. You can also take a screenshot of this. I know Andy talks about it a lot. And for those of you that are quite visual, because maybe this might not get triggered for like 6 weeks or 6 days, we just don't know. So when you go to see your alert and it pops up, you can click on the link to see the screen share of the shot that you've taken, and then you'll get this analysis. So just another little tip for the noobs who are tuning in.
Yeah, it's just here. So I could just add it into my alert. So, and now it's like it's there. So yeah, that's what I'd normally do, because also on that point is that if you're on your phone, let's say you're out and about, people sometimes ask me, is it a wise idea to buy and sell on your phone? Yeah, of course it is. If you're prepared, like if you're already planned and you already know what's going on. So if I'm out and about and I get an alert and I can just quickly look at the picture, I instantly know what's going on, and I can say with great confidence, okay, the dollar's going to go up. I need to be selling euro dollar. So I know I can just quickly look on my phone and do it. And the great thing with TradingView is obviously you've got the all of your tools, all of your indicators on the live charts as well. So I could also look at my daily trading range, see where the predicted high is of the day, and I could just place my stop just below, just above that. And I've got my trade, don't have to be in front of my screens. You know, we need to make trading part of a lifestyle, guys. Like, you don't have to be in front of your screens all the time, but when you are in front of your screens, you need to do this kind of organized work so that you're ready to take those trades.
Boom. There we go. Right. Okay. So that concludes the breakdown of the US dollar currency index. Hopefully that's given you a few trades. We did promise you a few trade ideas, a few ideas about general currency pairs that you could be looking to trade. As we promised before the show and now at the beginning and during the show, this is an action-packed show. It's going to kind of, we're trying to break your brain a little bit and give you a load of value. So promising our next delivery, as promised, let's jump in to the biggest news of the week.
Okay, let's do that. All right. So I'll just bring, so again, with the news, guys, like, it's up to you what you use. I tend to like Forex Factory. So that's kind of my go-to, but there's other economic calendars that you can use as well. And you know, you're free to kind of choose, but Forex Factory seems to be quite reliable. And once it decides to load up, we'll bring in our high impact news. By the way, I think a few people from Australia have not realized that the clocks have changed over here. So we may not have our usual guys from Australia here.
Yeah,
I got a message from somebody who is in Australia wondering where the show was. What's going on with the show?
Well, it was. I did say it in the video beforehand on the alert. So a video was posted, and yes, with great pleasure, I take in that it's an hour later. So it's what's the time here?
Is it? Is it better for you?
No. Well,
it's worse for you.
It is what it is. At the end of the day, it's 10:30 p.m.
Okay, so yeah, it's a bit later for you.
Yeah.
So where's our oh, it's already filtered. Okay, so let's have a look, guys. So start of the month, normally a busy one, and this is no exception. So there's a lot going on this week. Slow start today, which is always good. It's a good day to do your weekly planning ahead of what pairs you're going to focus on. So today is a quiet one in terms of news. We've got ISM manufacturing. That's about the only thing, but still, so a couple of bank holidays as well. And we have tomorrow is a big one in Australia. We have the rate statement coming out at 3:30 in the morning for us. And employment numbers quarter on quarter. So this is going to be a big one for Kiwi. So they expect a lot of volatility tomorrow. And, you know, with essentially, you know, with quarterly data, it's always, you know, they often get it wrong. And, you know, here we've got predicted 1%, 0.4% expected. So the employment number expected to be worse. So anything above 1% is going to see a big move up for the Kiwi, and anything less than 0.4 will see a big move down. Anything in between, I think, will just be a bit of a yo-yo effect. And then we have unemployment numbers as well. So this makes it very hard to trade. So if you're going to trade news events, ideally you don't want to have two at the same sort of time. And what else we've got? So we've got the FOMC statement. Again, an important one. You know, Fed fund rate not expected to change, but sentiment might. So again, a real important one. 6 p.m. for us in the UK. So you just got to work out your local time to see what's what there. And I personally don't think much is going to change on Wednesday. I think we've got non-farm payrolls happening start of the month. So on Friday. So I kind of think, as I said last time, I think for the Fed to increase rates, I really do think they need to see the employment numbers up. That's kind of what the chairman Powell spoke about last time, and I think that still stands. So I think we'll see what numbers come out, and the average hourly earnings as well. And I think if these numbers are really strong, I think we could get a really big move up in the dollar. So that's going to be an interesting one. If the numbers are average, that could be what pushes the dollar back towards that 618 that we spoke about today. And that could be a good buying opportunity, because I do think it's just a matter of time. I think it's the last tick before the Fed starts to think about, taking that sort of that action. And then on Thursday, what else have we got? We have the official bank rate from the UK, the statement, and yeah, it's a lot going on for sterling as well. So it's always like this, guys. First week of the month is very, very volatile, sets the tone for the rest of the week. It's a good time to really, put in orders that maybe seem quite fanciful right now, but with a lot of volatility, that can easily get filled, and then you can have a really great swing trade for the rest of the month. So use the volatility to your advantage. And that kind of wraps it up in terms of news for the week.
Cool. So with that all being said, we're approaching our stop clock time for 15 minutes to find an FX trade. With all of this information, with everything that we've done at the start of the show on the dollar strength, what's the one that's kind of jumping out for you to be the most likely to find a high probability low risk trade?
I'd like to focus on the euro. I think it's considering everything that we've done at the start of the show, I think it's a good one to also to see how that kind of matches up with the euro, where it might go and how it might move.
Cool. Okay. And what would be some notable kind of second and third place pairs that would just kind of pop up into your mind if people want to have a look at other currency pairs?
Well, I would definitely look at, to be honest, all of the majors, but like notably the ones that are kind of here, like the Aussie. The Kiwi is a tricky one, but the Kiwi included, and in fact, sometimes it can be in your favor. So the Kiwi for a swing trade makes sense because the market is reacting to two pieces of news, and sometimes it can create volatility, and then everybody decides actually to do something else. So you can get spiked in, and then the market goes the other way. So the Kiwi probably would be one of the top ones, and probably cable. I'd probably say Euro, Kiwi, and cable.
Cool. So there you go, guys. There is your homework for the rest of the week. But now we jump into, let me just get my overlay. Any questions, guys? Just pop them in the comment section as well.
Yeah, and I'm going to do the analysis on trading just to make sure that we run okay. So I'll shut down MT4.
Cool. So if you're just joining us now, you've missed our breakdown of the dollar. And obviously we had some really great reaction points against the Fibonacci cycles. And Andy made some really good predictions there. We've just gone through the biggest FX news of the week. And now we're looking to take all of that information into follow on what we did last week on the Euro USD with some live chart analysis. So do you want to take it away from there, mate?
Yeah, absolutely. So we've got the Euro dollar daily chart here. So what we're going to be looking for is, considering what we've seen on the dollar index, in general, we're going to be looking for opportunities at this market, where this market may go lower. Now, when you're looking at a swing trade, essentially what we're looking for is a higher time frame move. So when you look at something from a textbook point of view, you'd see something like this, and you're just trying to catch the swing. In reality, what this really looks like is more something like this, right? And then does that, and then so all of this noise that happens all the time. So it's never like this, and it's our job to make sure that one, we get a good entry point, and two, we have a good sensible stop so that we are able to stay in this trade. So when you're looking at something, that's important to understand that you're looking for a swing trade, but we can also go to the lower time frames to just try and time our market a bit better. So if we take this right now, we have the 50 EMA basically below the 200, so that is pointing down. We'll also have a little look at the at what's going on here in terms of price action. So we've got a nice channel support there that's acting as a good kind of floor for this market, and then we've got an upper channel there that could act as a resistance point. And what I really like about that is if the dollar was to drop, I've really liked that zone there as a potential short. Immediately that kind of stands out to me. So you can see 200. Like if you also kind of look at this here, you can see that these 2 points here were great resistance points. And then the market, if it did go up here, you'd have to say that also then becomes a great resistance point, potentially for the move lower. Of course, it could break and go higher. And we have to be prepared for all of that. And that's where the stops come in. So one option is we can get a pullback. The other option is we can play a momentum breakout. Let's quickly plug in our down fibs. Let's see where we stand on those. And then we can kind of see if we're expecting a potential pullback here. Where are we on the swing? So, the markets do move in waves, and we are looking for, hopefully, I'm going to find the correct one, and it's going to work. And we can now see, right, where's the starting point? 7,245. Let's get our indicator. It just makes things a little bit quicker. 7,245. Okay. If it works. Here we go. So perfect. So we have a current A, B, C. So similar to the dollar index, right? You can see that.
Look at that. Look at where that 200 is, mate. That's nice.
Yeah, the 200 is pretty much bang on to that 618. So that, and look, we've got data coming out. So what would be interesting is like if this market just kind of stayed sideways and then, because I know like obviously if it goes up here like that, you might think, oh, it's breaking, but that could just be a spike, right? Especially with data coming out, you could get that spike and then the market could then do something like that, right? Now the D takes you down to 113. That's kind of, and what I like about this, Gavin, you'll probably relate to this, is that we have this kind of untouched point of resistance that automatically becomes support. So I quite like that idea, potentially, of, if the market does spike up, I think this area here could be a very nice area to stick an order in. So you'd be looking at something like 118-ish, potentially, and just slightly lower. So about 118. If you're going to do something like this as a swing trade, I'll just show you in terms of what it looks like. You'd probably want to have your stop above the A. Okay, so this is like A, which is about there. Okay, and then you'd be looking at, roughly speaking, entering about there, and you'd be looking to target about there. And if you look at the maths, you can see you've got probably a 2.5 to 1 trade there, roughly speaking, maybe even a little bit more than that. Okay, so that's for somebody that doesn't want to be in front of their charts. They just want to kind of place their orders and then just kind of set and forget. Okay, and I believe you would actually possibly get a positive swap for shorting the euro dollar. You'd have to check with your broker. I don't have Axie up right now, but I've shown you guys before how to do that. You might even get paid interest to hold that short. So for people that don't have time, that's the kind of trade that you can do potentially. Now, what might also happen is the market may, so that's one setup done. The other thing that you could do is you might say, well, look, what if this market doesn't pull back? Should I short it here? Right. So if we're just doing the analysis on the daily chart and we're looking at swing trades, then I would be kind of looking at identifying how this market likes to move. So I do that by really analyzing what it's done in the past, and then we can kind of use that to find, when the market has now, potentially got momentum. So if we kind of take this line here and we use that as a guide, I'm just going to test to see how well this market reacts there. So you can see it's pretty nice. Support becoming resistance. So what I'll do is I would take this right here and I would put that there as support. And we're going to zoom in. And this is quite a pivotal point right now. Is this market going to close above this line, or is it going to close below it? Now, if it closes below it, you might be looking for, on a lower time frame, a breakdown. Okay, so a momentum play to short. Because what might happen is if you take this 2-bar formation here, you've got a bearish engulfing. In terms of volume, I mean, it's similar, which is, interesting. But you might get like a little bit of a flag and then a breakdown. So that's another possibility. So we need to go to the lower time frames if we want to identify that. But you want to look out for the close today to see if it closes above or below this line. I hope I haven't lost anybody. I'm trying to sort of cater to beginners and people with a bit more advanced knowledge. So hopefully we are covering both angles here. So here's the 4-hour chart. Let's, one of the cool tools I like the MACD. I think it's a great tool to identify momentum. So when the MACD is below the 0 line, that's bearish. And right now we've gone below the 0 line. You can see the last time we did that was here, and you can see what happened after that. We recently went above the 0 line. Since then, we've now gone below the 0 line. So right now, you might just be thinking, well, these pullback here looks like possibly, literally, this could be the push down, a flag, and then the next push down. That's possible, and we can plan for that. If that happens, you could take advantage. So let's quickly do it and see what we've got. So if I can, I'm gonna do a couple of things. So let's do the same kind of thing that I did on the daily. I'm gonna do it here on the 4-hour. Just gonna take a nice line. We're gonna use this approximate line of support. You can see there, it's absolutely beautiful, perfect, acting as great support. It's broken it, right? It's broken it. And it looks like right now that this is bearish. Right now it looks like, unless we go above here, okay, unless we close above here, I think the market could push lower. So it's going to be I would definitely keep an eye on this, guys, for the next few hours to see what happens here. You can also see we've got these really nice moving averages that have been acting as quite nice resistance. They're coming up here as well. We can draw our fibs, the mini fib, and see where the pullbacks are. Where's the 618? Where's the 38? So there's the 38. There's the 618. 618 comes in at 116.10. And that is a really nice resistance point on the euro dollar. Okay. That could be a great test to see what happens here. I think 116.10 is going to be the key thing here. If I'm giving you a few different scenarios, if you kind of get here and there's enough time in the day, you could look at that as a short and see where it closes. If we close above, that becomes a morning star, and now you're looking at that move up towards 118. and then we could look for the short up here for our daily swing trade. So we have to let the market show us. One last thing I'm going to do here is I'm going to draw my down fibs. It's easier on MT4, but as I said, for some reason, my computer has decided to have a meltdown. So we're going to use TradingView and its slight limitations just to make sure that we, let's make sure this is absolutely taken from the top and it's definitely correct. Looks absolutely fine. What is this telling me? Well, right now it's telling me that if I just, this is the current, hold on. Okay, I'm going to just delete my one, I think. Okay, so it's already, so it did a fade, right? This is a fade zone. It hasn't yet pulled back to its 38, has it? Not quite. No. And
was there a spike?
Look where 618 is. It's pretty close to that sort of daily 200, isn't it?
Yeah.
That's interesting. Well, I would just kind of really keep it. I really believe you need to let the market show you right now. But there's definitely value to sell up here, and there's possibly an opportunity to get something like that. You've got to remember there's a lot of news coming out this week. So especially non-farm payrolls, average hourly earnings. We've got the Fed meeting on Wednesday. There's a lot that can happen here. So I would be preferring, unless you can see an opportunity where you can go in, I would prefer that the market show us a little bit first and then we could take advantage. And if we can kind of get up here, then I think it's a good value area to short. But it could go either way here. It wouldn't surprise me either side. But I think the value's up here. And if we hold here, then you could take a short, on a flag breakout down with a target of 114 on the 4-hour, 113 on the daily chart. But yeah, that's kind of it in a nutshell.
Nice. Okay, guys. So there's been at least 2 or 3 ideas there for you. We've got a possible day trade for the day. Again, we're waiting to see the news guide us. And obviously, there's a lot of news coming out towards the end of the week. And we've got that 618 level on the daily, which would make a really high probability low risk trade setup that we started this 15-minute countdown on. So yeah, that's interesting. The only question I had was potentially if you got a short here and it bounced off that EMA and that market angle line and it went down to that 114, maybe some of that news you said that's coming out towards the end of the week, that could be really powerful and spike it back up to that 118 level, but who knows, right?
Yeah, I mean, it's risky to get in at a low price just before news. That's the only thing that I will say. But today's Monday, we've got Tuesday, so you could. It's whether the market's going to do anything before Wednesday and then before Friday. That's the thing. And typically Mondays and Tuesdays are pretty low volatility in general. So is there much value in taking a momentum short on a Monday or Tuesday, and do you want to hold that through FOMC? It just seems too high risk for me personally. I would prefer getting some of that volatility out of the way on Wednesday, sticking some orders in just in case. By the way, you could also do a sell stop. So you could do a breakout trade. So if before Wednesday, you could put a sell order down there, but there is some dangers to it because it's a statement and sometimes it can react and then react the other way based on what words are being said. So you're going to have some good targets in there and try and get some profit out. So it's a bit more for advanced people, I would say, than beginners.
Exactly that. So thank you to everybody that's still here on the live. We're not getting much love on the likes and the hearts, guys. So please hit the hearts, hit the likes. this is very unruly behavior. We're not feeling loved today. So that's the only thing we ask for, is a bit of channel love to help the algorithm on Facebook and everything else. But thank you for still being here. Hopefully you've got a ton of value from the content that we've given you today. And we're going to be back tomorrow talking all things cryptos. Very, very exciting place that we're in the world of cryptos. You can see my little face start to light up when just the mention of the C word, which is awesome. I'm looking forward to having some chats with you tomorrow, mate, about all things cryptos. By the way, if you're brand new, just still talking, so one person's given us a heart in that time that I've been talking. Thank you, guys. Whoever that was, thank you very much. The other 20 of you, start hitting that like. Thank you. But just in case any of you are new, there's some extended training. So if a lot of that may have gone over your head, Andy's going to break down in an extended webinar how you can start to learn the 4 key components that took him from struggling to make $200 a month to having his biggest ever trade as a hedge fund trader of $123,380, wasn't it?
That's right, Gav. Yeah.
I didn't even do it, and I remember the number. That is like epic numbers to like. That's an epic trade. I wish we could have screenshotted that trade, mate. That would have been
allowed
epic.
to, mate.
I didn't think of that. Yeah, you probably got to sign some NDAs and all of that jazz. But look, if you want some extended training, go and watch it. It's totally free. There is a chance to join in the program if you want to take your professional education further. No pressure on that whatsoever, but you will get a ton of value for free in the webinar. So go and check it out. It's completely worth your time. Now, we're going to be back talking all things cryptos tomorrow, like I said. Is there any message that you want to give anybody before we bounce?
No, make sure you're on tomorrow because it's going to be epic. And this is definitely the time to be learning and joining and listening to what we're saying, because I think there's some big things happening to the end of the year. So make sure you tune in. And we'll see you guys tomorrow. Thanks for being here.
Take care, guys.
Take care, guys.